Oil plummeted more than 18%, or 6% to an 18-year low yesterday, hitting its lowest close since 2002. I think that tick was $19.27 a barrel. For a closer look at what's been happening with the oil markets, let's welcome Dan Eberhart. He's the CEO of Canary Oil, which is known as the largest private oil company in the United States. And Dan, thanks for joining us today.
Thank you for having me.
So what do you think of the collapse in oil prices? Maybe not a surprise given that nobody's driving, nobody's flying, but it came on incredibly rapidly.
Yeah, no, it's been extremely rapid, but I think you've got to look at, what's happening macro-wise with the virus, and then also in our specific industry, the demand destruction is really catastrophic for us. So I think the demand destruction in China was down about 25% in the month of February, and I think we're looking at something like 20 to 25 28% demand destruction in North America and Europe this month.
I guess the big question is how long that lasts. How long can your industry put up with something like this if we're talking about another month, maybe 2 months of a shutdown in the United States economy?
I don't think for very long. I think that the industry is going to fall off a cliff here pretty quickly. The problem coming up is the storage capacity. We're looking at running out of storage for the first time in history. Prices of floating storage have quadrupled. Several of the pipeline outfits like Plains All American and several others have sent letters to producers telling them to stop and shut in production. And I think the storage crisis is going to be the next shoe to fall, and it's likely to push oil shorter or lower in the short term.
Texas regulators have actually been weighing whether to curtail production for the first time in decades. But maybe the issue with storage and the prices and the lack of storage at this point might be the thing that actually shuts it down rather than having regulators do that.
Yeah, the market will beat them to it because storage rates are skyrocketing. The price of storage in Cushing has doubled just in the past 3 weeks. And I think we're looking at a rapid rush for oil companies to stop drilling, to stop completing wells, and to shut in wells. So in the short term, I look for oil to fall, and I look for the production numbers to fall rapidly. This is definitely a case where the data is just lagging behind. The data is going to continue to lag behind what's actually happening on the ground in the oil patch for now.
The Trump administration has been considering intervening in this price war that's taking place between the Saudis and the Russians. President Trump had a call with President Putin of Russia yesterday and said they both agreed on how important it is to see some sort of stability in the oil markets. That doesn't mean higher prices necessarily, but what do you think about what the U.S. should be doing when it comes to foreign relations in this?
Well, I think Trump should be actively trying to solve this problem. I think that without a floor under oil, it's going to create quite a hardship for the U.S. industry. In the states like Texas, Oklahoma, and North Dakota, this is going to be a huge wet blanket on, what I guess we all hope is an eventual V-shaped or a high-sloping U-shaped recovery for the economy. There's an awful lot of levers that I think the White House has to work with Russia in terms of the Nord Stream 2 pipeline and using sanctions as a carrot and stick to try to get them to come to an agreement with Saudi Arabia. But this is very painful for the U.S. oil and gas industry, but also for Russia and Saudi Arabia. So I expect someone to blink at some point in the future. One of those three countries will help get the other two moving forward to a floor for the price of oil at some point, I think.